Okay, again, the 60-minute charts, which were suggesting a bigger pullback and momentum turning bearish yesterday, continues to play out. Again, piece turning off a trend line. If we get back above it, we have another trend line to be watching. Could still form a larger divergence on the 60-minute charts. As I've talked about, the Dow was down 154 points, down 0.35%. The S&P down almost 18 points, down 0.30%. NASDAQ down 0.25%. The Russell down 0.42%, down about 10 points. And the VIX was down 0.07%, still holding above that 14 area at 14.18. Tomorrow, we're going to get the CPI data before the market opens. Again, the market could have a big move on this. Again, expected to be up 0.3% on a month-over-month basis. The year-over-year is expected to rise to 2.7 from 2.6 the previous month. The core is supposed to be up 0.3% also, and also the core estimate is slightly changed now, expected to come in at the same level, 3.3%, as a previous reading. Previously, it was slightly lower. On Thursday, we'll get the producer price index. Week we'll have the Fed meeting on Wednesday. Again, even if the report comes in hotter than expected, the market shrug it off and ignore it. Like I keep saying, I expect the inflation data is going to begin to tick back up just like it did in 2007, but the Fed is still going to cut. The conventional wisdom is going to be, when we start seeing these hotter reports, see it this time or going forward, conventional wisdom is going to be, oh, the Fed, we're going to get less cuts out of the Fed. Fed can't cut because inflation's ticking back up. Could be a catalyst for a market sell-off, by the way. I talked about many months now that scenario. If recession hits, it doesn't matter about inflation. The Fed is going to start aggressively cutting, and that's why I say they're going to end up doing jumbo cuts, just like they did, the emergency jumbo cut did in 2007. They're blindsided by the recession. There is absolutely nothing to worry about. Fed doesn't allow bear markets anymore. They don't allow downturns in the economy. That's a thing of the past. That's what they were saying back at the 2000 top, by the way. Again, there's nothing to worry about. The S&P price to book ratio now exceeds the March peak of the 2000 high, but there's nothing to see here. Market cap to GDP now at record levels, now above the 2000 top at the 150% level, now above the 2022 top. They're at the 200% level, now at 209.25%. But I wouldn't want you to think the market is overpriced. Nothing to see here. Market cap to GDP here in blue at 209%. The S&P here in red. This is showing that the market is extremely overvalued, but there's really no reason why we should pay any attention to this. There's absolutely no cause for concern. Bullish sentiment. The S&P hits a long-term monthly trend line at 62.9%. Bullish sentiment at extremes. Euphoria off the charts, but no reason to believe that should be any reason to be concerned. Absolutely none. Please support the channel with the link directly below. That allows me to be able to provide you this information. If you follow the link below to take you to a secured site, you can donate any amount you want or make a recurring donation. If you do that, I thank you. But if you could take a moment to partner with me, I would really, really appreciate it. I don't have any sponsors, just a direct relationship with you. I turn those offers down. I don't want to sell you a bunch of stuff. That's how the money is made on YouTube channels for the most part. I just ask that you do what you can to help out. But if you could take a moment to do that, I would really, really appreciate it. Thank you for your consideration for that. And making this video to show you there's absolutely nothing to worry about, that this time is different. The put to call ratio down here, 10-day moving average of the put to call ratio down here at extremes where their tops have formed, but this time is different. Complete complacency among option traders. It's just showing they're overdosing on calls. Should be buying puts. That doesn't matter. The Fed's not going to let us go into recession. It doesn't matter that the credit markets are down at extreme lows. This is where other tops have developed. There's no stress in the credit markets whatsoever. This goes along with market sentiment. This is showing complete complacency in the markets. Stress in the credit markets, the S&P will start having a downturn. When we get stress in the credit markets, we'll start seeing this rise sharply. And it doesn't matter that recession indicators that have been reliable for decades are predicting a recession. That doesn't matter. We know better now. The Fed won't allow a recession. Matter that we've had the uninverting of the yield curve and it's steepening, that doesn't mean anything. Or that the SOM rule's been triggered, and again back in July, 5 months ago, and it's predicting we're about to move into recession, and it's never wrong, and yet the Fed is dismissing this. I think the Fed is right. We're going to have a soft landing. There's no reason to believe these things. Because it's been right for decades doesn't mean it's going to be right now. Why would it be? There is absolutely nothing to see here. This is just a bunch of FUD. And when we see the uninverting of the yield curve between the 10-year and the 3-month, which is going to happen right before the recession hits, we can ignore that. Fed's not going to let that happen. They're not going to let a recession happen. Come on. The recession's been canceled. The Fed has canceled the recession. We should believe them. That they're telling us we're going to have this soft landing. And all the experts are saying we're going to have this soft landing and there's nothing to worry about. And they're heard on the internet, on social media. The recession has been officially canceled. All these signals that have been correct for decades, you just believe the Fed and just ignore all these other things. Dollar breakout, so what if that marked the stock market and Bitcoin top back when it happened previously? This time is different. Doesn't matter. And here we broke the two trend lines, and then we broke overhead resistance, broke the two trend lines, broke overhead resistance, bounced off the 200-week, bounced off horizontal support. That doesn't mean anything. That the dollar is now surging. There's a negative correlation with Bitcoin and a negative correlation with the market, suggesting that one of them is wrong. Either the dollar breakout is wrong, which it would have to collapse if the stock market rally is going to continue to go to our brand new bull market. Fed is cutting rates, and it doesn't matter that marked the top for the market before. This time is different. And I'm really glad this time is different because this negative divergence would really be alarming. Multiple point negative divergence. This time wasn't different. I mean, this is totally different. This is, totally different from the divergence over here and from the divergence over here. Absolutely nothing to worry about. And so what if the 50 period is above the 200 period on the VIX daily chart, and that's created all these other sell-offs, in 2022 and 2020 and 2018 and 2015 and 16 and 21% drop in 2011 and the flash crash and the bear market in 2007. So what? This time is different. So what that Nvidia stalled at a major long-term trend line of resistance? And so what? It turned down with earnings and that it's diverging with the NASDAQ. It's made a lower high. NASDAQ made a higher high. So what? This time it's different. It's not like the AI rally is going to end. We're not going to have the bursting of the AI bubble. Come on, man. And just because euphoria is now higher than it was at the tech bubble, the bursting of the tech bubble, it's no cause for concern. Other extremes have marked important tops. This time is different. And market breadth indicators are diverging with the S&P 500 again. Stocks in uptrends on the S&P making a lower high, the S&P making higher highs. Just like it did at the March top. Nothing to worry about. Stocks above their 50-day moving average on the S&P doing the same thing. And again, S&P's just moved to new highs recently. Last week, we're making a lower high here. Stocks above their 50-day moving average diverging just like it did back at the March top. Larger diversions back over here at the July peak. Exact same thing it did at the two previous peaks earlier in the year at the July top and at the March top. We're seeing a similar situation set up here currently in 2024 that we saw back at the 2022 high. It's the multiple divergences that formed with stocks above their 200-day moving average on the S&P 500. All these things are happening. The S&P is tagging the long-term trend line nearly 100 years old here. This black trend line right here, we tagged it on the last day of November, the Black Friday abbreviated session for the stock market. Again, I told you I thought we would go higher and go up to the 6100 area, reach the trend line in the weekly time frame, slightly overthrowing this trend line. But if this time is different, then again, we're probably just going to see this go at a 90-degree angle here and just go beyond this trend line. So this channel, long-term channel, nearly 100 years old, this thing does not matter. Now, I'm obviously being facetious. The same arguments at every top. Oh, this time is different. You know, same argument we're hearing with the AI stocks and the AI bubble that's been created as we heard with the dot-com bubble and the tech stocks back then. Bursting of the tech bubble. The Fed won't let it happen. There's no sign of a recession. Markets top on good news. They bottom on bad news. Been predicting we go to new all-time highs. I'm still saying that. Just reached my objective target in the monthly time frame at the mid 6,000 area. I thought we'd overthrow it to reach this trend line right here and go to that mid to high 6,100 area again, towards that high 6,100 area to complete this divergence. Now, there's a high probability you're going to see a top in December or January. Maybe we get delayed of taxes going into January. That's certainly possible. A pretty good shot you're going to see a peak in December here if we can reach this target level and begin to turn down off of it. These divergences begin to play out. This is a parallel boundary to the upper boundary here, the lower boundary I should say, and reach that. And that's why I told you I thought we'd overthrow the trend line in the monthly time frame to reach this level. The upper trend line on the rising wedge in the daily time frame. Still think that. Nothing's changed. I still think we're going to get new all-time highs, likely to the high 6,100 area, where I think we're probably going to reach this trend line and peak. Be going into the inflation data or on into the Fed next week. Maybe it drags out into January. In 2022, we peaked the first week of January in 2022. Could drag out. Regardless, again, I'm looking for a top here. I'm looking for new all-time highs first. Because I say I'm looking for a top, a lot of people ignore that I keep saying we're going to move to new all-time highs. I keep talking about these target levels on the monthly and the weekly time frame. I'm still bullish, but I believe that a top is about to happen. Talked about the S&P 500. We sold off today, but I talked about the S&P 500 coming up and getting back above this trend line that we're turning down off of from the July high, going to this other trend line and moving above 6,100. We tagged the 6,100 area just under it at, 6,099. I think we're going to exceed it and we're going to go up here. And then I think you're going to complete a larger divergence on the RSI. I think this divergence is only giving us a pullback. I think you're going to end up seeing a larger divergence develop here. And again, then a top. I think the S&P is likely going to come up to this trend line right here. Now we'll see what happens with the inflation data. This trend line is very close to where we're looking at with that per channel line in the weekly time frame. Very close to the trend line right here, the upper boundary of the rising wedge. Now we are turning down off the trend line from the July peak. I've talked about this. We've had 2 days of selling. We hit that now on Friday. We turned down off of it. Possible that is the peak and we've turned. My guess is it's not. We need to see more evidence that that is the case. My guess is we're going to sell off. Maybe we sell off even further and then we rebound back up. But again, I think that here, December, we're likely going to reach this level. We're likely going to reach that upper boundary in the weekly time frame. A rolling over with momentum at extremes here. We did close below the 10-period moving average. Continue lower. You got the 20, you got the trend line there, and the 50 below the trend line. If this trend line breaks, that would be a bearish sign. Watching to see how the CPI data comes in tomorrow and what the market reaction is to that. Told you we could be pulling back to form a divergence here on the RSI in the more recent price action, much like what we had over here at the July peak and over here at the August high, so on and so forth. We've got the MACD rolling over here, so again, we'll be watching to see what happens. If we do get a bigger sell-off, I'll be watching the trend line here from the August low. Again, we had the divergence here, little rising wedge setup. We turn down, we come back, and we have now filled this gap at the 6,050 area. Okay, and in the cloud of support, we go down further. You've got your 200-period moving average. You're watching. Do we keep going down and going down further to reach extremes, or do we try to recycle back up and maybe form a larger divergence? The upper boundary, the rising wedge, and the upper channel on the weekly chart. That upper boundary here in the daily time frame in black. Now, despite the sell-off in the last 2 days, we have not gotten a bearish reversal of conditions here with momentum in the daily time frame. The cloud has not yet turned to red. The bars have not turned to red. We've got the oscillator bars turned red. It still may. The Dow had turned red. Again, the Dow could form a divergence or confirm a lower high. We could see a divergence again develop here in the more recent price action. I've been talking about with the awesome oscillator. Same thing with the MACD. It closed below the 10-period moving average, but the bar is still blue, the cloud is still green, and we did not close below the lower boundary of the cloud. So again, going to be watching. And even if we do, it may be that we end up forming a divergence right here in the month of December, maybe with the Fed meeting. We'll see what happens. But again, if we do get red, still got a pretty good shot that a divergence develops right here and on the RSI in the daily time frame I've been talking about. The daily here. Dow's hitting the 20-period moving average or getting a candle of indecision in the form of a doji, which would be a continuation or a possible bottom. Reversal bar. We've got some red going on here, but you could still form a divergence on the Dow, on the awesome oscillator, and on the RSI. There's a little divergence on the RSI that gave us this sell-off here on the Dow. I've shown you that chart previously. Don't have red yet on the awesome oscillator here for the NASDAQ daily chart. Again, we're still above that 10-period moving average. We're holding up better here at gap support. S&P went back to fill the gap. NASDAQ's holding at gap support right here. So again, we'll be watching the NASDAQ closely. Does it start getting red bars? Do we start seeing the bearish reversal of conditions on the S&P and get a bigger sell-off? Some did turn bearish on the intraday chart, so that certainly is possible. Or again, do we recover and go back and try to form a divergence on the S&P and the upper boundary of the rising wedge? NASDAQ turned off of it, so it'll be interesting to see what happens. But we have red there. I'll be watching to see if it shows up. I'll be watching to see if we take out the 10 period or do we bounce off gap support here for the NASDAQ. Now, the VIX was up more than 10% yesterday. It was up over 11%. The VIX is predicting that tomorrow we will have an update for the S&P 500. The VIX was down today, but so was the S&P 500. The S&P 500 was down nearly 18 points today. So the VIX is predicting an 85% chance of an update tomorrow based on probability with the closes on the VIX. Again, 15% chance it will still fail, but more often than not, 85% of the time, within 2 days, you see that happen. And that's suggesting either a bounce or a bottom for the S&P. Now, again, signals starting to turn bearish. We'll be watching to see if they remain that way and we get a bigger sell-off. But the VIX, for what it's worth, is predicting an update tomorrow with the CPI data. Nvidia was down 2.69% today. It broke this trend line. So again, this horizontal support is now in play. We peaked with earnings off of this trend line. I talked about that before it happened. I told you to be watching that trend line. Told you to be watching for a head and shoulders. Again, this could be done, or we could still go back up and fill the gap on a closing basis. We tried to do it on an intraday basis here today, but we could still do that. And again, continue to form the right shoulder and again, take a little bit more time doing so. But if we break this trend line, which we've now done, and close below the 50 period here, if this horizontal level of support is taken out, and again we go back and we break the channel line right here in the weekly time frame, then these divergences can begin to play out here on Nvidia. That's going to happen. Question is, do we buy a little bit more time first? This is why I say NASDAQ very well that has already diverged with Nvidia. NASDAQ's made new highs recently. Nvidia has not. NASDAQ may now still diverge with the S&P, and it could be weighed down by Nvidia. It was back over here in July. Nvidia couldn't make a new high. They diverged at that time, also Nvidia and NASDAQ. But we could see NASDAQ at the trend line just turned off of, and again, possibly NASDAQ and S&P will now diverge. But we'll see. And NASDAQ can still move higher. Something to watch. NASDAQ still may reach this channel line right here. It's overthrown this boundary from the trend line from the pandemic low here, but we still may reach this trend line right here. And again, a very similar trend line I'm watching on the S&P 500 from the lows back over here in 2022, or I should say the highs in 2022 for some counter trends. We're just getting an overthrow here for NASDAQ, but if it can continue, I'll be watching this trend line. You've got your divergences developing here in the weekly time frame, the MACD, it's on the price oscillator, it's on the RSI, it's everywhere. NASDAQ 100 was down 0.34% today. It was down 72 points. And again, coming down to the 50 period, we're here at the gap support area. S&P has filled the gap. NASDAQ has not. So again, we'll be watching. We've got this divergence on the RSI here on the 60-minute chart of NASDAQ already playing out, and it's produced a sell-off. The question is, do we get a rebound now and get a larger divergence or a confirmation of a lower high? NASDAQ got a little bottoming tail just underneath the 50-period moving average today, so we'll be watching that. But we're right at the gap support. If we go lower, you got the gap filled down here, and then if we take out that level and end up getting a bigger sell-off, you've got the gap filled down here in the 200-period moving average. We've turned off with the peak over here. We have this little rising wedge. We've turned off of a trend line with this divergence right here. Turned off of a trend line in the daily time frame. Just slightly overthrowing it just a little bit here, this rising wedge. And again, oftentimes rising wedges get overthrows. We may even get a bigger overthrow if we can go higher to the upper channel line in the weekly time frame. But again, just some things to be paying attention to. We are at extremes. With momentum, we can remain at extremes for an extended period of time, but we're already starting to roll over there. So again, we'll be watching, do we get a bigger sell-off? But as we've hit this trend line here from the high here and the high here, S&P has fallen short of that. S&P has turned off of the trend line from the July high, and NASDAQ has exceeded that trend line, and right now it's acting as support just above the 10-period moving average. Again, you could still see a larger divergence develop, or a confirmation of a lower high, or even an overthrow right now. If we can turn back up here, you may see a divergence into these levels, or overthrowing these levels slightly, but slightly overthrowing this trend line. So we'll be watching. MACD still got a potential divergence there. The RSI has moved slightly above the previous peak over there. Quickly, again, the Dow had that divergence off of the upper channel line here. We're at the 20 period. Do we form a larger divergence or confirm a lower high? MACD's rolled over. We're trying to find support at the 20 period moving average. S&P's just taken out the 10. So again, just some things to be paying attention to. Dow's turned off of the upper end of the channel line. Still may reach it and go back and flirt with those levels. But again, you've got these multiple point divergences on the Dow. Had the divergence on the Russell, and again, turning off of this trend line in red right here in this larger channel. Same place right there. Turned off both the larger channel in the weekly time frame, and got this divergence rolling over here. So again, I'll be watching with the next rally. Do we stop making new highs with the Russell? Does this divergence mark a peak here? And sometimes at turning points, you see a divergence between the Russell and the S&P 500. Again, the Russell's turning down off of this larger channel line. We've moved above the 2021 top, but you have the negative divergence, just like all the other negative divergences you have in the weekly time frame on the S&P, the Dow, and the NASDAQ. Triple divergence on Nvidia. Firmer reversal for the Russell is, again, the RSI dropping back below 50. It's been above it through the uptrend and eventually taking out the 20-week moving average. By the time you do that, though, you'll probably be at a whole lot lower levels. That's what happened at the 2021 top going into 2022. Got a significant sell-off taking out the 20 and dropping below the 50 level on the RSI. You got a 2050 sell signal on the Russell. Now we had these 9 counts on the NASDAQ and S&P. We're continuing to monitor. We got the 9 count went a little bit higher with NASDAQ, and we're getting a little bit of volatility, and we're at gap support, so we're watching. S&P went up and slammed up into that trend line from the July peak and turned down off of it, getting a 13.9. So again, possible that we turn off this trend line and we start getting a reversal. I think you got a really good shot at going up and hitting the upper boundary and hitting the upper channel line on the weekly chart. NASDAQ did reach this upper channel line and moved above the trend line from the July peak. S&P is turning down off of it. It has not reached this other trend line. Again, be watching to see if it does. But again, we did have a 13.9, went just a little tiny bit higher. It may go a little higher. All is said and done. Still the possibility of a reversal off of this trend line. My guess is we're still going to reach the next level into the 6100 area. Reach this immediately, we would have only been in that low to mid 6100 area. Could be we're pulling back to reach the upper end, the trend line in the weekly time frame. So again, I'm watching these trend lines. Again, possible reversal here, or we could reach the other trend line and then begin to turn there. That's what I think is likely going to be the case. But again, I want to present both scenarios to you because it could be close but no cigar. I don't have a bearish reversal of conditions yet in the daily time frame for the S&P or for the NASDAQ, but we saw momentum flip here yesterday for the S&P intraday, and now we're seeing the trend signal turn. If it's short-lived, we can go back up. If it's bigger, again, we can go down to the trend line of the 20-period moving average. Still could form a larger divergence or sell off further and get a larger divergence here on the RSI. At some of these other turning points, that was the case. We're watching, do we get a CPI sell-off or do we recover? Momentum here bearish, the trend here not yet turning here intraday, but we did see the balance of power go negative intraday during the session. Strong push down on the S&P late day. Now, we did not get a bearish reversal of conditions today on the NASDAQ. Momentum line is still bullish. Bars reflecting momentum still bullish, but we did get a topping signal. Short-term momentum could be turning. We're at gap support. We're turning down with momentum here. And again, it could be possibly signaling that we get a sell-off with inflation data. We'll see what happens. The intraday charts are kind of suggesting the opposite of that. The VIX is predicting an update tomorrow, so we'll see how this unfolds. But nevertheless, here it is. Just want to show you we did get this on the NASDAQ daily chart. Doesn't mean a major top is in. It just means it just looks at momentum. Had the same thing on the S&P yesterday, and again, some of these signals could be suggesting a bigger pullback, but the momentum line is still bullish at this point. That's a little blue line you see right here, and have a bearish reversal of conditions yet. So if we do see more red bars on the awesome oscillator with the S&P, we start getting it on NASDAQ, we might see a bigger sell-off back to the rising trend line or back towards the 20 or the 20 on the daily chart, and NASDAQ could move back to try to fill the gap. S&P's already done it. Now again, it's just looking at momentum. The signal could just be marking this pullback we're getting right now. Could be a shorter pullback if we don't see trend signals begin to turn bearish and we don't see momentum flip back to bearish. So far, momentum's hanging in there. Trend is still bullish at this time, so we'll be watching to see how this unfolds. Trying to make you aware of these signals. Showing up as the S&P's turning off that July trend line I've been talking about, get above it and go to the boundary of that larger rising wedge.